I'll be right back, guys. What's up, guys? What we have. Fuck. I'm waiting on the short side. I'm totally missed that shit. Those of you guys who know who have the LB, we did a great back and fill right there on a 2 minute. We couldn't get up to 80.50. Might be an area of interest. There goes 80.50. It was way too fast. I couldn't get in. It was way too fast. I was trying to get 80.50, but it just popped and came right back down. Didn't have the chance to. I'm not going to participate in this too much. This does look like fuckery. If you're leaning on the short side, watch 92. If you do get into a short, my aim will probably be at 58.75. First and foremost, look for 92, 91.75 if it gets there. and bounce to the high side again. A lot of large wicks in this area, so I would say be careful. I don't see too many participants, whether it's long or short. Some buyers have stepped in, but not necessarily a lot. Yes, it feels like it's NQ right now, the way it moves. Is there a lot of slippage? Yeah, usually with high vol. They're really walking this down to the major level at 71, 71.50, 71.25. I don't trust any of this shit. Um, all right, guys. Trade check. Type out how many trades you've done today, and you don't have to really say your PNR if you don't want to. But...
Zero.
Oh, really? Good stuff, dude. Good stuff. Good stuff. 6, 8. Wow, 6 is a little bit much. Depending on how you trade. JJ, Bayman. I guess that's really low for you. Nice, Red Pie. Wait, Cosmo, are you joking around? Cosmo's joking, right? I think Cosmo's joking. Oh, because he said it was scalping. Was Cosmo the one who said scalping? Um, Rye 3 or 4. Not bad. Good job, Red Pie.
Just took one trade.
You just did,
Yeah.
and I bet you're out already.
Of course. I went long.
This is gonna run. This is gonna run. Hey, if once John says he's gonna try, everyone get in the same direction. Everyone. He'll be out, and then we just time it. Usually, it's about 10, 15 minutes. You earn an easy 3R, and then by an hour mark, you should have 100 ticks.
That was 5 points.
Cosmo, be careful if you're scalping because um, the thing with scalping, even in these events, if there's a lot of slippage, you're gonna actually lose more than you think, and then you know, yeah, you can make a lot of money, but it's also very dangerous.
So this entire move down,
Yeah.
the CBD was going up. That's why I kind of liked the long. And it was like a very tapered bottom in the prior 30-minute bar. So I kind of took it right there. And obviously we're going up.
Yeah. We also basically clicked it to 1 tick at our major level.
Jesus Christ. I do think we go up though, because
No, I mean, I don't disagree. I was not. I don't know I didn't have a strong feeling, so I didn't want to lean either which way, which is why I didn't trade it. But I did say, and I was looking at it, I was like, oh, it seems like they're walking it down to that major level. And they did it by 1 tick and then they just bounced up. So it was a good trade by you. This should have held. But we're not surprised, John. Still a good trade.
I got 5 points, so I'm pretty happy.
You're celebrating? Balance to the high side. Jesus, this thing is crazy.
So I was actually looking at the entire time. You see how the CBD was just moving up the entire time it moved down, and my trigger was to get in when I see like a taper at the profile at the bottom, like very little volume trade at that area, and that's exactly when I hit market. And here we are.
Good stuff. What's your upside target if you were stuck?
This actually might be it right here because CBD is flattening right here. Like I'm not saying it's happening right. It's going to happen right now, but CBD is still moving up. So, but it kind of flattened right here at the moment. Basically rejecting the VWAP at this moment.
Long at 93.75, but looks like I'm gonna get stopped out here. Oh, mitigated risk already at 92.25, so risk-free trade. Just so fucked fast. Uh, okay. Shit's so fast I can't even announce where I want to get out. About 89.50. Going to break even. So even it gets back to my entry price as a small winner. It's just way too volatile for me. This is like trading NQ, with just small stop losses. Broke even on that. Slight win, I should say. Oh shit. My order. I gotta get up.
Bonds are jamming.
They're jamming. Yeah, that's probably a good short. What are they playing, Harvey?
Three little birds upon my doorstep, singing sweet song, melody pure and true. Let this be a lesson to you.
That was a crazy whipsaw. Well, it was like a two ticket winner ultimately. Slightly more than two ticks. And that's with one tick of slippage. You sure?
dollar index starting to catch up.
You haven't taken any trades today, Harvey?
Missed that in the morning, so now and then I look at it and I'm like, holy fuck, there's a lot of shit, like a lot of range. Like, it's pretty deep.
Yeah.
50 ticks doesn't seem to be a problem, but I mean, that's also on the, you could be
Downside.
wrong 50 ticks too, right?
Yep, agreed.
Working on my mind. My mind has been a little bit fucked up lately, right? So the trade on Friday really pissed me off.
We'll go through it.
What's that?
We'll go through it.
Yeah, no, I took the whole weekend to go through it, and I know where I'm going. I know what's going on, right? I really do. Now to fix it, that's another story, right? Like that's the whole thing with this trading thing. It is. 90% of this is all in your fucking mind, right?
Yep.
Or like, sorry, the battles that you have with your own demons. Anyway, it's really, if you look at it, the job's not that fucking hard. Like, be
It's
honest,
not?
well, you push button at the bottom and you push button at the top, and you walk away and you're happy. And it's like, if you can, yeah,
I think it's easy
can
to
be hard, I guess. You know what I mean? Like, it's just, it really.
No, that's like saying, hey, how hard is it to play basketball? Just put the ball in the hoop, right? And then if you're even more gifted, just dunk it. Can't be that hard. If you dumb it down, yeah, it sounds really easy, but it's really fucking hard.
Yeah, no, to actually make it happen. Yeah, exactly. You have to show up at the fucking court at 6 in the a.m., leave at 6 p.m.
Yep.
To be LeBron James or whomever, right?
Mm-hmm.
Now, you don't have to show up at 6 a.m. and leave at 6 p.m. if you don't want to be LeBron James. You could be a guy that doesn't ever play and he just sits on the bench and still make money as well, right? So it's just in your mind. See any of that golf on the weekend? Ooh-wee.
It's pretty crazy.
Damn, I had a good entry along the bottom there.
Choppy as shit though, John. I wouldn't beat yourself up about it. You actually would have got shooken out no matter what, anyway, because you went in you were like 3-4 minutes early, to be honest, right? And you probably would have got shooken out.
Yeah, I usually do.
Well, no, see how it went up? You got the good entry, but it went up and then it ran back to your price. And it means that it's probably a really good price, but I mean, at the same time, it probably would have shook you out.
Yep.
As it would have shook a lot of us out. So I'm not. I wouldn't beat yourself up too much for missing or shutting that off early. Do like what you wrote though. What was it that you wrote, John? It was something like. I have to look it back up. What you wrote? It was. Wait, give me a minute. I'll find it.
So this 30-minute bar put in an exhaustive high, but I'm not looking to get short yet because CBD is still moving up in that direction.
Be the
To me, John, I would probably just, for me, it's more of a time constraint than it is what you said. I understand what you mean, though, but for me, it's more of a time constraint. I want to wait another 20, 25 minutes or so.
no, John. It was just the wording. Will monitor price action. I mean, like I like where you're going with that. Where you're like you have your scenario. It doesn't mean a push button right then and there. That means
Yeah.
I'm
Well,
going
what
to
I
monitor
really,
price when it gets around there or whatever. Like I thought that was pretty good for you to say that.
yeah. If you look at where I put my scenarios and my trade location is usually around areas of low volume areas, single prints or imbalances. Those key reference levels. So that's what I do, amongst other things.
Uh, Zero. Do
Yes,
you
sir.
ever like in the trading view? Do you ever use the news tab? Like there's a little news tab on the side.
Trading view.
Well, it's just I
It's on
used
the
to.
chart.
I mean, it's on the chart.
Sometimes they'll list on the chart on the bottom. They'll have like a little lightning bolt.
Right,
Can you
that's
click
in
on it?
that upper setting. Right, but on
Yeah,
the sidebar with your watch list.
I don't. Do you? I I don't know if it's been proven useful.
Sorry, kids are on March break. Um, you know, I used to. I used to because of the equities.
Mm-hmm.
But long story short, it moved it or something. They changed it. It's not there anymore. Like the little tab isn't there anymore.
Mm-hmm.
I fucking hate updates, man. I don't know why they have to fuck with my shit. Yeah, so I was asking if you knew where it went.
No, I actually don't. I never use it, so I don't.
It's awesome. I built a list of the banks. For these banks, the signature bank. That's what I was trying to find. Right, I think it's actually closed. SBNY. I think they actually shut it right down. SBNY. Small caps are still ripping.
As they should be.
What's that?
Small cap should be ripping right now. The implication of potentially lower interest rates making their debt more serviceable and lowering their interest rates, or their business loan interest rates. Yeah, small cap should be ripping. Oh, that's disappointing.
Well, that was a heck of a push.
Watch out for that. Let's see. What was that? Watch 3912. So far, scenario 3 is playing out, but still watch out 3912. Did we hit it already? No, we're still a bit shy. Okay, now we hit it.
We just completely gap filled.
Did we hit the settlement too?
Yep, exactly to the prior close. Like it just hit it exactly. So you better get a squeezy.
Yeah. Squeezy.
I saw some cash secure puts on Friday, so this might be good for me.
Oh, my entire LinkedIn feed is people discussing SVB and it's being drastically overcomplicated.
No way this thing gets. It looks like there's a compression in your chart, Zero.
Yeah, there is. How do you know? What are you looking
No, on the right side, I'm looking. You see, we got higher lows and
okay.
compression towards 39.13.
So why are you reading my charts better than me? I was looking at my other screen. I do see.
How many?
Just don't
That's
know
how many?
Excuse me?
What's your time frame chart? What's the book for your
This
chart?
one's the left chart is 5 seconds.
How about the
This
right?
chart is a range chart. The right one's
okay. You know what? I don't have any charts that can see that. That's interesting. I need to set that up.
Santos helped me if you want to ask him.
Actually, I do. I need to open it.
What the fuck? Jesus Christ, man. I literally looked down for a second and this shit already hit. Just so fast.
$12.50 coming in. It was awesome. NQ from -3 to +1 and rejected it. It's awesome.
I'm not entirely sure. Yeah, I'm not entirely sure. Good call, Harvey.
See that little wiki woo on NQ at 8:49 a.m. Eastern?
Mm-hmm.
See where that went and pushed through? We've never really, have you back tested the depth of that before it goes back to +1?
I
You know what I'm
have.
trying to say? Like that's all it has to do is actually go down and do what you're saying. There's 30% right there.
No, I've back tested it to
It's
+1.
awesome.
Yeah. I know you don't have the levels, but the weekly did the same shit. NQ weekly, sorry, ES weekly was
Jeez, look at this blue.
Chicka. Holy jumpy juice.
Look at ES's daily. Fucking went up all the way to weekly -2, bounced it, and ricocheted.
So
No, Monday's even better. Monday has a higher chance.
of the weekly, you think so?
According to the back test.
Well, today's not a
I
great
thought it would
Monday.
take time for the weekly to work its way out.
Well, that's why it's like you have more time for it to revert back to the mean, right? Versus, say, if it's Friday, you don't have time for it to revert back
It's
to
done.
the mean.
It's
Yeah.
fully. Yeah, right.
Right. And if they're going to extend it by the end of the week, it's like, hey, we're setting up for a new open for the next week.
Yeah.
Because it eventually has to break, right? It can't stay within it.
If you were.
Yeah. So.
Yeah, no, that's what every time I mention time, that's what I'm trying to talk about. It's just gonna, like, that's what I mean. It gives it, everything can catch up. That's what it is. It's like a moving average. Oh, is price going to go down to moving average, or is moving average going up to price? Or how about they're actually doing the both at the same time?
Same shit,
and now
right?
now it's time. Yeah, and now it's time. When is it going to want to do it? Right, like at the end of the day.
Yep. If I was watching ES, I'll probably blind short this +1, the daily +1.
It looks like it should, but I mean, what about what I suggest? Well, I spent I'm working on this.
Maybe with like a 2-point, maybe with a 3-point risk, 3-point mitigation. Yes. Even though we're already fucking rejecting. I don't know. We'll see.
If anyone, Zero may appreciate this.
What's up?
Here, just a generic. Since we've discussed ATR before and using ATR for continuation trades or reversals, this gives a reasonably good visualization of where you might want to take a long or where you those are, I guess, better phrases for the break of structure traders.
Mm-hmm. What are the white lines?
White line? You mean purple lines or the white bars?
Oh, sorry, white bars. Sorry.
White bars are outsized ATR, 2 standard deviations from the norm. So 2 sigma event, and then that's going to print a purple line at the bars open. But this would have given some reasonably clean trades with decent R.
So you would take it at the or at the next candle, or
when you have an untested purple line, You would be fishing for orders there ideally. Granted, you could use a lower time frame for confirmation, or you send them.
Time frame is this chart? Size of these bars? A second,
I was like, no way. This is like 5 seconds.
I'm asking.
What's the look back period that you're using as far as like for the ATR? Yeah. Hey, Harvey.
Yes, hello.
What you just told me. If you want, you should probably share. Never mind. I'll just text you.
Okay. Yeah. Yeah. We'll let it play out a little bit further. All the time in the world here, buddy.
Hey, you're talking over.
Talking over somebody? Somebody else talking?
Yeah, Numbers is.
Right now?
He was when you were talking.
Fuck you talking about? I can't even hear him.
I don't
Is he
know.
talking right now?
Not exactly right now. He just said no, but anyways, I don't want people to talk over each other. But anyways, whoever, whichever,
What are you
whoever.
talking about? I asked him a question about the bars and nothing. Silence since then. Is he talking right now? Do I have to restart my thing?
Yeah, he literally answered all your questions about the bars.
Oh shit, really? Because I can't hear a goddamn word. Really? Oh. Sorry, man. I apologize for that.
What? I'm talking over him? What do you mean? As he's talking.
Yeah, like, I couldn't hear a god. Like, I seriously didn't hear a fucking word. Sorry, man. I apologize. So what the fuck is it? 5 second chart or what? I thought that was really strange that you just didn't say anything. I was like, what the fuck?
What a dick.
Yeah, so I apologize. I really.
That because any circumstance, bank at the moment is going to have a bank run. They're going to have to realize their losses. As when you hold the bond to maturity, it's only going to be paper losses. However, the quote unquote bank run is going to cause those to turn into realized losses, reducing the liquidity present and taking a 15 to 20% discount when realizing those losses. Therefore, there's not adequate capital. Causing the insolvency, and that is a concern with smaller banks. Increased volatility, I predominantly associate that with the uncertainty with interest rates right now. This could be a good circumstance for the Russell if there is a reduction, or if we begin to taper potentially. This is going to be quite good for the Russell because the serviceability of loans for many of those companies in the Russell 2000 is going to improve due to their interest rates decreasing. In the past 2 years, most small business loans have gone from about 11%, and now they're sitting at 17%. And if they can reduce that down to 12 to 13% through refinancing, they're actually going to be in a very good position. So for small caps, this might be a bit of a bullish circumstance to say, oh, I want call options or I want something to have exposure to the potential upside from reduced interest rates.
Numbers. When you're saying these 2x impulse ATR moves, are you, in your, I guess, experience, does that mean that with an impulse we are actually heading towards that direction or away from that direction?
The impulse, when you say in that direction, could you elaborate a bit on that?
So, for instance, the purple line's at the open of the white bars. So if we're impulsing from that, from the open and that big white, candle, that means we're actually going, say, upwards or downwards away from the open. Is that what I'm reading? Am I reading this?
You would assume, if you wanted, I have a version of this which uses it with a trend direction, so you're only taking it on trend continuation. But this would be the outsized bars would be a quote unquote the direction of the trend, and that's where you would want to be taking your trades. Is the outsized bar is going to be what you consider the direction of the current trend. And then you want to take the continuation off of that.
Yeah. Okay.
And there are other ways where you could say, where you can filter it. If I can pull this up, let me see. Holy fuck, weird. Okay. Confluence and 2x. Analysis.
Starting to like this short more and more, FYI. Bonds did a great back and fill, but unsure if that's a real move towards the upside and if it will break towards the upside, but it seems like a good back and fill. I'm not currently in or taking.
Okay. Kind of Cosmo. I really haven't been all too actively trading. Most of my stops right now, actually, I'm prioritizing NASDAQ right now. On NASDAQ, most of my stops at the moment are about 15 points, 10 to 15 points on NASDAQ. Yes, about 5 to 6 points. No, not Tex Gecko. The strategies which supposed to started being deployed last week, and then some issues arose, and I started to run it again, and it was taking trades which weren't aligning one for one with the parameters. Some of the trades were, some of them weren't, and they weren't showing in the back test. Anyhow, about 40 to 50% of the time on the reason why we're prioritizing NASDAQ is due to how vol mean reverts. We're able to run about a 45% win rate with the average win size being 113 points. So it's not really feasible with a couple tick stop. The priority is intraday swing trades, where we're looking to predominantly catch the high, catch the low, and then let it run. This strategy is completely different now. Our holding time horizon is often about an hour and a half. It truly is an intraday swing trade. That's why the stop size has increased. And right now, the final aspect which we're going to incorporate is move stop to break even after the second take profit is hit, and we're going to ladder out of positions. Since there's a fair bit of money being left on the table, coincidentally. I'll be back in a little bit. Probably I need to hop on a call. I also need to go grab some Rice Krispie treats. It ends up being inadvertently a nonlinear chart, but you could use reversal bars as well, Peter. I'll be back in a little bit.
So the question is, what's going to happen? Bonds found some good back and fill. So let's look. We have new highs. See what this does. We have quite a bit of compression right now. Not a lot of buying or selling. That wasn't a lot of buyers either. It's getting kind of wacky. You guys already know it's thin. Fat Cat, are you gonna stream later or what's up? No reason to go long or short in my opinion.
Some compression there, isn't it? There it goes.
Compression.
Right to the number too, eh? Like, oh no, never mind.
What
Minute
number?
off. Took a minute to go
yeah.
to space and back.
Yeah. 38, 3901.
Son of a sack of a
Sacagawea.
Sacagawea is right. Fucking Pocahontas, motherfucker.
If you're looking for a short, 3175 will probably work. Maybe 3150. Or not.
Risk is fucking ticks away. Like,
Yeah, it's just way too
that was awesome.
fucking way too wild. What about Bitcoin, man?
What about Bitcoin? See, is it fucking? VIX is pulling back, that's for sure.
Oh, Bitcoin is ripping. There's an explanation as to why Bitcoin's ripping. I'll give it in a second. Did numbers leave already? Of course, he made Risk Krispie treats. That man child. And that moves way too fucking fast. Thanks, man. I honestly don't know how anyone would trade today. Like, a lot of fuckery going on, in my opinion. Um, you know, some really bad areas, to take. Even though it hit that 38.71 level to the tick, I I don't know how or if I would have taken that. Today was tough. Scenario three just played out very well, but it's a tough day, man. If we close around this area, I mean, scenario three just basically played out, since the key of scenario three was that we finish at the week's open, which is right here. But I don't know. Anyone in anything? Hopefully something short from like 33.50. Not bad. Nice short. Good pullback short. I can see this coming back to 20. 1975.20 before having further downside. I can see that. That's okay, Peter. Nice, Rye. Good shit. Who are you doing it through? Earn to trade? Oops, wrong one. Oh, okay.
Yo, I've returned.
Hey,
Yeah, Rice Krispies. They're fantastic, but I'm dead inside. Regarding 2-minute ATR, I think it does have value.
it does.
I think I have a chart open with it. Okay. Yeah, I do.
It works well.
As everything, it depends on context. That's part of the issue. I'm probably in the coming week and a half going to start running some Bolinox accounts.
The what account?
Another one of the companies, Bolinox.
Is that like a combine or whatever thing?
It's a bit, yeah. I refer to them as business entities. Yeah,
Okay.
because it's the strategies which we're going to be running, at least at the moment, appear that they're going to be significantly more "quote unquote" capital intensive. And before I put potentially 7 figures of my own money into an account, I would rather run it on Apex or Bolinox initially, and then have a bit more confirmation, because until we integrate the take profit ladder, there's the possibility of, if we want to trade 10 contracts in NASDAQ, to do that comfortably, you would want at least 200,000 in an account. If not, maybe a tad more. But I figure I'll run it for a few weeks on Bolinox, since Bolinox offers 5 days to pass the challenge, and then you can receive payouts weekly. Not such a bad deal. And Rye, regarding Apex, I received 2 payouts from them, and then I had the accounts terminated since I held the trade into the weekend. But I was running 20 accounts on Apex. You should expect at least the initial payouts. I didn't make it past the first 2 because of the account being terminated.
By the way, I called out that number 3920. I got short at 3920 and then I covered it at 3915.50. So just FYI. Just a quick little move. Raj just passed his thing numbers.
Yeah, that's what we were saying.
Yeah.
So this is a 2-minute ATR chart.
Yeah. Oh, good thing I covered my shit. That should just blew past it. Anyways, okay. Sorry, go ahead.
No worries. No, all I was saying is you were asking about 2-minute chart. That is,
Right. Interesting. And this is a 20 period move, looking back.
I think I'll check. Sierra chart is more or less fun to play around on now for me, and that's okay. Yeah, 20 period.
So it's just 2 times the average of the 20 period.
3. For lower time frames, you want larger.
Interesting. I've been coding like a madman lately, or learning to go like a madman. So I'll definitely take a look at that.
I'm waiting for something to be integrated into one of the library or into VBT, which in a release this week, it should be updated, since I've been going through each and every trade. Well, not most of them, looking at MFE, MAE, and holy shit. The frequency with which we are 80 points up on NASDAQ and then comes back and stops us out for 20 points is at least 4 to 5 times a week. Therefore, we're going to be integrating a take profit ladder into it because that should make a significant difference. But seeing that there's pretty frequently we're up 50, 60, 70, 80, in some circumstances, 110 points, and then it comes back, stops us out as well. Fuck. This is what I really want right now, though. My birthday's not until May. In all candor, I'll probably purchase myself another bike come May as birthday gift. My main issue is I have no idea where the hell I would put this because it's not something you can move. It's about 200 pounds. And this is a small version of it. Has Risky been active today?
Not today, no. Or at least not that I know of.
As I have a new trade thesis called the Risky Options Inverse Index.
What's that?
Considering all the times where he said he's bought 0 DTE or a couple options expiring, which have all been pretty bullish, the market's dumped. So just take the inverse of it.
I don't know. I mean, lately his options have been, I think, pretty bad.
That's what I'm saying. Take the inverse of it, similar to the Kramer inverse index.
Peter, that was a major level, dude. 71.25 is a major level. Well, 71 flat, but yeah.
Oh, wait. I thought this was satire. Wait, this is OT. This has to be OTC.
It could. Right, I'm not entirely sure, to be honest. I normally don't trade at this time of the day. Do you not see it, Peter? Let me know if you don't. I want to say because maybe numbers, maybe because Pine Script is just for trading, that their technical analysis function library isn't more robust, but it's just a little bit easier to type, whereas Python does everything.
It depends on the library you're using, though.
Yeah, you're saying use TALib, right?
TALib is one. And if you're interested in price pattern, VBT, you can do that in about 10. I'll give a code snippet.
I mean, I just want to fucking backtest my shit, and I just want to enter. Like, is it possible to say I can press a button and be like buys only or sells only for the certain instruments? Like, I don't want it to buy and sell at it's based on the code.
Well, you would have specific parameters of where you buy, where you sell.
Okay. So I can't just be like ignore all sells, just buy. Or I guess I can just write a different script and pause one and play the other.
Well, no, you should be able to introduce that it's all dependent upon the logic.
Okay.
As granted, you can use Pine Script to trade if you want, but you have to build a webhook to extract the signals and then build an execution through, let's say, IBKR's API to execute the webhook signals. So all you're doing is you're taking the Pine Script signals that are being generated, feeding that through a webhook, and then executing.
But Pine Script in itself is really shit. Well, at least I think so. I don't know Python, but for instance, I can't code. At least I haven't found a way to. I should say that I haven't found a way to code it where I want it to take a 1-to-1 risk to reward ratio from the current swing low. So I can program it in to be like, okay, look for the lowest low of the last 15 or 10 or 8 or whatever bars and place your stop there. But that stop is trailing. That's one. And two, they take stop loss and take profit based on percentages. So you can say my stop loss is 5% or 2% or 1%, and whatever your take profit is up to you. But that's not reflective of where you're wrong. Like obviously it shouldn't drop that flow, but is Python the same thing as like based on percentage and points and not necessarily
you can have it based on points without an issue. Okay. But that has to be dynamic enough unless you're updating unless you're updating every day the take profit percentages.
Right. Interesting.
Or let's see.
Peter, it depends on which platform. So sometimes I know certain platforms, when you roll over to a new contract, they'll adjust your levels for you. That's not what you want. Not with my levels. So let's just say you use standard support resistance, Peter, and that wick or this tested area is a certain number. When you roll over, you won't. For most people want to see why they want that number because there's multiple wick tests or whatever. Not for my levels. My levels are strictly that's a number. Doesn't matter what contract it is. So 10 years later, that number's that number.
See, you could just do this 0.
Hedging is better than stop losses. What?
Someone 2 months ago, 3 months ago, was posting his content in the coding portion of the Discord with Furs and Tundra Trader. And yeah, I was learning my strategies from this guy, and he's right. I was back testing them, and you're trusting a guy that has completely bald, that has a beard like that, posting videos on YouTube as such. Yeah, that's definitely true.
No way, this guy actually just hedges instead of taking stop losses?
I have no fucking idea. I watched 5 minutes of one video after someone posted it in the coding channel, and I was entirely complete waste of time. He wasn't communicating anything. It was a cacophony of drivel where these videos are 40 minutes, 30 minutes, and he is literally not saying anything with substance or significance. It's all filler.
I don't watch anything aside from maybe an audiobook, or Fat Cat's videos that take more than 15 minutes. This is insane. 45 minutes and he doesn't say shit.
I have no idea. I saw the
Oh my god. I just heard him. He goes, it breaks the zone because supposedly, and then he literally says, guess what? Now you have to hedge again.
Yeah, I only saw the video thumbnail, and you have to be kidding me.
Here's the exact time. And he actually said I'll put on captions for you guys. Now you got to enter 2 hedged positions.
Keep adding. Averaging down. It sounds like Michael Burry calling a top 19 times, and you're right 2 of them.
But why not just use options for his strategy? I don't know. What the fuck do I know?
I'm actually building something for YouTubers with Whisper, ChatGPT, and fine-tuning the models based on their videos to improve subscriber interaction. Well, subscriber interaction and the sensation of connection to the content creator, which I'll hopefully finish that up in the next week and a half.
For what? ChatGPT?
Pretty much fine-tuning GPT models on all of a YouTuber's content, and then creating more or less a chat bot that is able to replicate their voice or only text, where their subscribers can completely interact with them, and because it's trained off the videos, all the responses will be about identical to what one might expect from watching their videos. So you could have an actual dialogue with them through the use of OpenAI's Whisper, or it can only be a text response, whichever you want, as if you're texting them as if they are your quote unquote friend, as if you know them. And that's to improve quote unquote the relationship and the connection between a subscriber and the content creator, where the individual feels not only as if they consume their content, but as if they are their actual friend and they know them personally.
That's pretty cool.
What?
That's pretty cool.
Yes, and then initially I want to target the 100 largest content creators, and ideally charge, depending on the size of the content creator, for larger content creators, 30 to 40,000 a month.
Mm-hmm.
So we'll see. It's more or less a fun side project. See if anything comes of it, but it's pretty straightforward to do. Since that's the primary objective of most content creators, is to foster a relationship with their subscribers and consumer of content. And there's really no better way to do that than actually have a subscriber be able to interact with them via text or voice, where it's trained on all of their videos. So it knows their vernacular, their colloquials, and it will respond exactly how a subscriber would expect that person to respond based on their videos.
But would the subscriber actually know that it's AI and not him or her?
Well, yeah. However, I don't think that's in all candor particularly important, because it's fostering additional interactions with the content creator. And that's what's more important than anything else, is the interactions that occur and the frequency of which. And let's say you specialize in finance. I don't like Graham, Steve, or Stephen, whatever. But if it's trained on all of his videos, you could have someone type in, "Hey, I came into a lot of money recently. I want to buy a house. What should I do?" And it would give a pretty thorough response based on all the videos, since you're vectorizing the text and using cosine similarities to determine which portions of his videos are most similar to that, and then construct a unique response based on what the person's asking, which then it becomes an actual ongoing dialogue of that content creator's opinion based on their videos.
How long do you anticipate them to either kind of run a sim where your bot can actually mimic the way they speak, their, vocabulary?
How many videos?
Yeah. Oh, so you're just gonna make the bot watch the video and then mimic them?
Yeah.
Is that okay?
Yeah. I don't have.
The bot doesn't watch the video; it reads the text like you just put in, right? So it's actually just going to read what your text. Like, you see how you closed captioned it?
It's taking a text file, converting it into a CSV. However, then the integration of Whisper is a lot, because there is voice synthesis available on Whisper.
Tonality and everything, right? It needs to mimic its tonality, its accents, everything.
That can be done quite easily.
Okay. That's really cool.
It's a fun side project, more or less, than anything else.
30 or 40 grand is quite a bit. But I think for the bigger YouTubers, yeah.
For content creators that are making $40 million a year.
1,000 in one day, man. Some of these guys.
Yeah. And so how do they value the relationship to their subscribers? Because the entire purpose and intention of this is to improve the relationship with their subscriber base, where the subscribers feel more connected and thus involved in their lives. And if you can facilitate and foster that relationship, the value of each subscriber increases drastically, because then they are willing to support your products. There's the two value adds of not only fostering an improved relationship with the content creator or with your subscribers, but if they can develop a better quote unquote personal connection to them through the frequency of interactions, you're going to have a improvement in conversions for products you may be selling.
Yep. Agreed.
Thus, if you're making $40 million a year, an extra $30,000-$40,000 a month to foster that is nearly negligible. And let's say for a smaller YouTuber with 1 million subscribers, offer it for a couple thousand a month. Because once you have the framework built, it's copy and pasting the YouTube channel into the back end and then having it train on all the videos. Reinhardt, it's how many contracts are you trading? That's going to be the preliminary basis for how many ticks of slippage you might begin to incur. Because if you're trading one contract, then 1 tick of slippage is reasonable. I don't know if you're trading micros, full size. Yeah, if you're trading 1 to 2 ticks of slippage is reasonable, but it doesn't scale linearly. It's actually closer to asymptotic. Why would you trade 30 micros instead of 3 minis out of curiosity? Because the commission and fees are going to be considerably higher. What I consider acceptable slippage on NASDAQ is because I aggregate price levels into full points. 1 to 1.5 points of slippage with decent size on NASDAQ I consider that acceptable. Because if you're working with exceptionally tight stops on NASDAQ, you're going to be stopped out quite frequently. Great instrument for scalping, but yeah, Risky also does 55R a week. Yeah. Are you trading live or on Sim, Reinhardt? Because if you're using Rhythmic's matching engine, Rhythmic's okay. Are you? What versions? Okay. Whose Sim are you using? Because Rhythmic has an actually quite accurate matching engine, but you have to be logged into the Rhythmic Sim or Rhythmic demo for that matching engine to successfully work. Since Rhythmic matches or Rhythmic replicates the queue positioning to provide realistic fills. That's going to be the concern, is CQG is not accurately replicating queue positioning, so you're transitioning to live. If you're trading 1 contract of NASDAQ, expect account for 1 to 2 ticks of slippage with market orders on 1 contract. If you're accounting for 2, that's a prudent. Oh, yeah, everyone has issues with understanding the end of that. What in particular, Belisarius? As someone with whom I'm working right now has, they found a few bugs in it. I presume you already have your signal funk fully working? You're referring to issues with callbacks returning to the signal funk, correct? Or liquidation? Because regarding liquidations, I'm actually in the process of building. I was using their pipeline. I'm now in the process of building my own pipeline because tracking of liquidations isn't particularly well supported, and when you want to make it number optimized, there are If you don't really have a strategy, pipelines is dependent upon having a successful integration of signal funk. Without a comprehensive understanding of your signal funks, the use of pipelines, you are going to encounter frequent issues with understanding the end of it, because the end of the pipelines is dependent upon your ability to create and implement signal funcs. That should be your priority at the moment, is signal funcs. Yeah, signal tutorials is more important than the pipeline. Far more important. Since he initially didn't build VBT with the intention of having it working as well for live trading, but that's soon to be improving, I believe. And once he prioritizes the integration with live trading, then the pipelines tutorial and documentation should be a bit more comprehensive. Reinhardt, it's a bit of an interesting circumstance because the arbitrageable difference, as price slips, you often have an increase in temporary liquidity based on exchange and market maker requirements. Thus, it can be heavily skewed where you do incur slightly more slippage, or there might not be slippage due to an increase in available orders on the book. This, as an example, let's say someone's trading let's say 10 lots on NASDAQ. And you should expect 3 to 4 ticks on average of slippage, about 2 to 3 ticks of slippage of 10 lots. If you want to jump up to 150 lots, you would only be expecting 6.5 ticks of slippage to 7 ticks of slippage because of how the order book populates during large market orders. Microseconds. I was watching other YouTube videos regarding GPT models, Belosaurus. I pretty much spend half my time looking through OpenAI, Whisper, Whisper, GPT 3.5 turbo models, and then the cosine similarities. Which is vectorization of the words or segments. Yes, certainly. Fair warning though, scalability when 4 ticks of slippage on NASDAQ is of concern. A strategy doesn't scale overly well if 4 to 6 ticks of slippage will make or break a strategy. More or less fair warning regarding that. Pollock doesn't really trade. That's the issue. He's a phenomenal developer. Profit factor is more important. Where does he arb? That it's not really particularly feasible anymore. Pre-2018, in 2019, yes, it was. But after the run-up in 2017, you started to have co-location offered by the largest exchanges, and that's when you had institutional participation, making it not particularly viable for quote-unquote retail to arb crypto anymore. But I don't think Sharpe ratio is particularly accurate because you can easily skew that. You can have a strategy with a 1.5 profit factor and a Sharpe ratio of 11.5. Yeah, I would use profit factor, particularly if you're building parameterization. You should be weighting towards profit factor versus Sharpe ratio. Since week to week, you could have a Sharpe ratio 1 week of 175, and then the next week you could have a Sharpe ratio of negative 25. I really don't think for traders, Sharpe ratio isn't a particularly good metric because the risk-free rate is practically zero. It's the equivalent of holding cash. Since Sharpe ratio is entirely dependent upon the risk-free rate, and there's no equivalent risk-free rate for trading. If you're using the platform for portfolio optimization, then yeah, I'd say Sharpe ratio is reasonable. But for intraday strategies, Sharpe ratio is a horrible metric. It's reasonably apparent in the documentation that he really does not trade all too much. Most people here use Sierra chart or Jigsaw. Unfortunately. Unfortunately. I lead a boring life. I'll be back in a few moments. I'm gonna go grab. I need a couple bananas and 2 more Rice Krispies, since I'll probably ride at 1 o'clock, even though my legs feel absolutely horrible.